Hello and welcome to the latest Focus IR CEO interview. I'm joined by Adam Davidson, CEO at Trident Royalties. Trident is a diversified mining royalty company listed on the OTC and AIM, and Trident has just announced the purchase of a significant new copper-zinc royalty in Arizona. Welcome, Adam. Am I right in thinking this is the third royalty acquisition in the second half of the year?
That's right. Yeah, and it'll be our third one. It's been a busy year, our fifth in total for the year.
Let me talk to you about the latest copper-zinc polymetallic royalty acquisition from New World. Where is it exactly, and what are the terms of the deal?
Yeah, so this was a primary financing. So investors that are familiar with Trident would have noted up the last few transactions that we've done, and actually the bulk of the transactions we've done since inception were on existing royalties where we're buying them from third parties. That said, we have done primary financings where we're actually providing capital directly to the mining company to help advance their project. And that's what this is. We're providing primary financing to New World, an ASX-listed copper developer that's advancing their flagship Antler copper project located in Arizona, providing them with 11 million Aussie dollars, so roughly 7 million US in cash. And from our perspective, this gets them up to basically an investment decision. So they'll complete their Prefeasibility, which is slated to be done by the end of this year. And then also gets them through their feasibility study and up to the point at which they're putting in the decline for the project. So from our perspective, it's an ideal opportunity. We get a 0.9% NSR royalty over the entirety of the project, plus all their kind of key exploration targets in the nearby area. And then we also get a 0.45 NSR royalty over an area of interest 5 kilometers around sort of the core project area. So if they pick up new ground, the royalty will convey to that ground as well. Gives us a lot of upside on a project that, as it stands today, is a good substantive copper project in a good jurisdiction. They published their scoping study, an enhanced study earlier this year. As I mentioned, the PFS is expected before the end of the year. But on that scoping study, we see a 13-year mine life, good production of sort of circa 33,000 tons of copper equivalent per year. And we'd expect to see that grow as they continue to drill and do more study work. So a really good quality copper project in a good jurisdiction that in this macro backdrop we think is the right kind of asset we want to get in the portfolio.
So what makes this one particularly attractive? What's attractive about Antler?
I think a couple aspects. One is, as I mentioned, the jurisdiction. So it's in the U.S. in Arizona, which was rated by the Fraser Institute as, I think, the 7th best mining jurisdiction globally. It sits on primarily private land, so that streamlines permitting and makes that process a little bit smoother. But at the end of the day, a lot of it comes down to the project itself, the quality of the resource. It's a large, nearly 500,000 tons of copper equivalents at over 4% copper equivalent grade. So it's a very high grade deposit of scale in a good jurisdiction. Having the scoping study there allows us to analyze the economics. So they're projecting for a roughly 250 million capex ticket, a project level IRR of 40%, and an NPV of 830 million on the project at scoping level. And as these things go, usually the pre-feasibility study is better than the scoping study, and the final feasibility study will be better than the pre-feasibility study. So we only expect it to get better from here. But as it stands today, this deposit is suitable to become a mine. It's 13-year mine life, as I said, 33,000 tons of copper equivalent a year. From a royalty holder's perspective, it's also great that 50% of the revenue comes from copper, 38% is from zinc, and then there's byproduct credits from lead, gold, and silver that make up the balance. So in one royalty, we're getting exposure to 5 different commodities. So we're pretty excited about what this one brings with it.
Okay. I always mean to ask you about funding, and I often forget. But and you've got 25 million US in the bank. You hold 25 million. So how are you actually going to fund this? And why would you not simply spend all your cash on it?
Yeah, so the last couple deals we did, you would have noted, one of them, 85% of the consideration was linked to production metrics, and then the one prior to that, 40% of the consideration was linked to production milestones. You can't really do that as much on a primary financing because the reason they're issuing us the royalties is because they need the cash to advance their project. So in this one, it's straight cash up front, but the way we've been able to do our deals so far this year, we feel like we've been able to stretch our balance sheet to a pretty significant degree. And so with this one being about $7 million US, that leaves us circa 18 million pro forma on the balance sheet. So we're in a good position. We're not under pressure from a capital perspective. And this allows us to get a good royalty into the mix. It allows New World to take this cash. They also recently raised $5 million from a leading mining private equity fund. So a good endorsement there, as well as leaving them very well funded to really get the project up to a construction decision.
Okay. Do you prefer primary or secondary royalties, or is it you're fairly agnostic?
No specific preference. The one nice thing with primary royalties is you get full access to the data. You can really dig down into the detail, whereas secondary royalties, you may be limited in your information rights. That said, secondary royalties, you can usually get a little more cute with structure. So, the previous deal we announced prior to New World was on the Paradox Basin in Utah with Anson Resources, another ASX-listed company. But we bought that royalty from a third party, so not directly from Anson. And in that case, it's a $10 million headline deal. But we put down 1.5 million, and then 3.5 million is due after a couple quarters of steady state production, and then the final balance of 5 million is due 2 years after the second tranche. So you're able to do some clever structuring to, as I said, really stretch your balance sheet. But on the primary side, it allows us to really dig in and find good quality assets. We see this thing growing pretty significantly over the next several years and becoming a real core holding within Trident. And it's hard to pick up stuff like that necessarily on the secondary market.
Okay. And if we're talking about Antler, the pre-feasibility study hasn't quite been completed yet. So does that mean you're actually taking on a little bit of risk here, or is that not necessarily the case, as it might seem?
Not as much as it might seem from the outside, because we did have sort of full data room access. So although the pre-feasibility isn't done and then wasn't done by the time we were sort of through our diligence, a lot of the inputs that would be feeding into that study were done, so we were able to evaluate those. So yes, to a certain extent, but I think by and large we know the key stuff that's going to be comprising that pre-feasibility study. We just don't know sort of the end product at the end of the day. So that'll be a surprise to all of us, but we expect it to be positive. And from our perspective, to announce the deal this month, and then the pre-feasibility is expected before the end of the year, so that should be some good news that validates this investment sort of coming shortly thereafter.
Okay, and you're getting copper, zinc, and other polymetallic royalties. So what are attractive about those, and why do those fit nicely into your diversified portfolio?
Yeah, I think for us, so when you look at the analyst analysis of our net asset value, most significantly is lithium, followed pretty closely by gold, and followed then by copper. We'd like to get the copper balance up a little bit, and we're actively looking for copper transactions. There's fewer of them out there, and even fewer that are on good quality projects that have that sort of clear runway to how they're going to get built, which is an important consideration for us, because you've got the ability to go out there and add to your copper portfolio, but it may be on assets that are very long dated, or it's just opaque on how they actually get into production. Something like this, it's substantive. I think we'll see continued progress on this project over the next couple of years. That's the kind of thing we want to get into the portfolio. So we're very happy to have more copper for all the thematics that people are familiar with. Most importantly, electrification, all the sort of macro discussions around EVs, around modernizing the grid. I mean, that's all held together by copper effectively. That's what transmits electricity. So very happy to get more copper to the portfolio. We don't have zinc until we did this royalty. So we like getting some zinc into the portfolio. We like it that it's coming in the form of a project that the economics are driven by copper, but there's significant zinc credits there, because zinc mines in and of themselves, that they can be very, very swing assets if it's a primary zinc mine. So we like this as a good way to get some zinc exposure into the portfolio. Then, of course, good to have some lead, gold, and silver kicked in for the balance of the 12% of revenue.
Okay, my final question for you, Adam. We're coming to the end of an acquisitive and I have to say very active, very positive year for Trident. When will we see that coming through in increased revenues?
Yeah, so stepping back, we only listed sort of 3.5 years ago. And when you look at our revenue last year, when you take into account sort of the one-off payment on the Premier offtake, we were I think 13.7 million in only our second full year of operations. This year, obviously, we don't have that one-off payment, but I think the revenues themselves have sort of either in line or sort of ticked up a little bit from there. And then looking forward, importantly, I think we see quite a few assets that have scope to come into the revenue line item next year. Greenstone, operated by Equinox, is flagged that first gold expected in first half of next year, and then steady state production in the second half of the year. And on that one, we've got an offtake that's annually capped, but we've got an agreement such that if they don't reach that cap, we'll get popped up at a sort of fixed dollar per ounce metric. So that sees a good amount of revenue sort of come into the portfolio that's not there today. The Bandoko acquisition that we made in August, B2 Gold has been pretty clear about the scope for that to come into the revenue relatively quickly. It's an exploration asset, but one of the reasons we liked it is it has this kicker where they've made clear they can truck that material to their Fekola mine. It's good oxide that can be processed through their existing plant, and it's higher grade than the material that they'll otherwise be mining as they shift underground at Fekola. So I think we could see that one come in over the next sort of 6 to 18 months. The Preciosa silver royalty that we bought in the first half of this year, they flagged production from stockpiles may not be too far away, but sort of the real meaningful production from fresh ore. The operator of Avino Silver and Gold is flagged as H2 next year, and then we'll see that one ramp up. And that one also has the $8.75 million milestone payment linked to it 12 months after first silver production. And then we've got an offtake on Sugar Zone. They're putting in a pretty substantial drill program now, drilling it out. They paused production. They're doing a plus 90,000 meter drill program, flagged that they'll be turning on sort of 12 months later, which would put it in 2024. So there are other assets as well, but off the top of my head, there's 4 assets for you that we'd expect to be coming in over the next sort of 6 to 18 months. And then you've got sort of growth within the portfolio. The Eagle Mine has been expanding production and is expected to continue to do so. The Bula, our copper royalty, has reached sort of steady state of 10,000 tons a year, but is ramping up now to 20,000 tons a year and has the ultimate goal of getting up to its feasibility study level of 56,000 tons a year. So there's a lot of organic growth within the portfolio that will drive revenue, as well as new assets turning on. And then some of the big prizes like Thacker Pass, our lithium royalty, turning on in the second half of 2026. But I think we'll expect to see a pretty steady march forward in revenue. And then the final thought is that, again, we've only been listed 3.5 years. This is the revenue profile we pulled together in that brief period of time. So if you fast forward a couple of years, we're not going to be sitting idly. We're going to continue to push down our cost of capital, continue to add royalties that will add to that revenue profile. And I think the company's going to continue to grow in the right direction as it has since inception.
Adam Davidson, CEO of Trident Royalties. Let's leave it there. That was an absolutely fantastic summary there. Not just of the New World acquisition, but of your the potential for Trident. For more company information and to access the company bulletin boards, please do go to the Trident pages on London South East and add Trident to your watch list. And meanwhile, do follow us on Twitter. That would be @_FocusIR_ or also @London South East. And finally, all that remains for me to say is thank you very much indeed for watching.